and you're schooling them in a very, very different manner than you or I were brought up.
Right. I tell people to figure out what your passion is and pursue your passion. If you love gardening, don't go to law school. Go and become a gardener, because someday you may have a chain of garden shops all over the world. Just follow your own passion. That's what you're going to do best at. And even if you don't succeed, at least you're going to be happy, and you're going to be the last person laid off, probably.
That doesn't really describe the modern world, though. I'm presuming that when you were a young kid, where did you grow up, by the way?
I grew up in a small town in Alabama.
Alabama. Well, you did grow up around cotton then, actually.
I did, yes. There was a lot of cotton. Those old cotton
you were obsessed. You had OCD about cotton and corn.
No, we were not farmers. I mean, I wish I'd learned to be a farmer, but I didn't.
But you must, Andrew, in your industry, no 8-year-old ever since. What do you want to grow up to be? What did you want to be? Fireman, policeman,
Look, my dad
jet pilot?
My dad was an accountant, actually. So
you wanted to be an accountant?
Well, yeah. Then I turned to the dark side and turned to recruitment. So I recruit accountants. My family are full of accountants, actually. But I agree with Jim. You really need to be passionate about what you're doing, especially in this marketplace. This marketplace is difficult. This marketplace, only the tough will survive. So unless you're passionate, unless you're prepared to put the hours in at the moment, you won't succeed in what you're doing. So I totally agree with Jim and his thoughts there.
You know, we tend to, over the past several years, because it's been so lucrative, we tended to look at the iBanking, the corporate finance space as sort of homogeneous. Everybody wears expensive clothes, drives expensive things, spends a lot of money on expensive wine. But when push came to shove, we kind of learned that people had latent skills. Nobody grew up as an iBanker. Nobody was an iBanker at 18 years old. I was reading a story the other day in the New York Times, just today, in the New York Times, about somebody who was laid off from a corporate finance job. He's making jellyfish tanks because a lot of companies, want some color to cheer up an otherwise sort of dark gray kind of a mood. Do you see a lot of these people kind of going back to it's kind of sort of that, like a child of the mother's breast sort of, let's go back to our youth and the innocence, to rediscover innocence lost sort of phenomenon?
What you find people do in tough times is they go back to their core, what they're really good at, so using their strengths. So, a lot of the discussions I actually have with my staff is getting back to basics. And understanding what your core is and what you're strong at. And what you find in difficult times, that shines through, and that'll help you get through the process.
Right.
But again, you've got to remain positive. You've got to ride with the market. We can't dictate what the market is doing, so we need to ride with it and work through it.
Okay. You wouldn't recommend that anybody actually get an MBA, right? Or necessarily say, I'm going to go into corporate finance, so I'm going to study for my CFA or anything like that. What kind of career guidance are you giving to people who have the flexibility and the mobility?
Those people who are looking at the moment, I wouldn't advise going back and getting an MBA right now. What I would advise is looking at the contracting and the temporary market. That market is really picking up. And if you're in a job, you're certainly more marketable than if you're out of a job. So if you're in a contract role and having discussions on a permanent position with a prospective employee, it puts you in a lot more powerful position regarding your salary and your responsibilities within that role compared to if you don't have or if you don't have a role at this present time.
All right. And Jim, you're good at calling decade, 2-decade kind of trends. What do you tell the people? We have a very young demographic watching.
Finance is going to be a wasteland for 20 or 30 years. Do not go there. I'm telling you, it's going to
study agriculture.
No, it's people who produce real things. Now, funny, we've had many periods in history when money shufflers were the place to be. We've had other periods when real things were the place to be. You got to be in real things now.
Concur?
Look, not totally concur. I think there's a job out there in any industry for everybody. You just need to make sure that you're best at what you do. The market will pick back up, and any layoffs or redundancies we've seen in the past and the past 100 years, those jobs will come back eventually.
Right. My parents stuck me in pre-med school at one point. I couldn't stand the blood because I thought it was too depressing to work in a hospital. It's like worse than working in a hospital sometimes, covering the kind of news flow that we have. A lot of oil stuff. Let's see what people think about oil. Can you pull up anything, any of the oil related screens there? Here's a viewer email. Well, we can do this first. When does deflation turn into inflation? What's the inflection point?
Well, if you're smart enough to know that, you'll be the richest person in the world. You'll own Bloomberg someday. But we do know that throughout history, whenever people have printed a lot of money, it's led to higher prices. This is the first time in world history that every government in the world is printing a lot of money. And they're doing it at a time when commodities are under pressure, supply pressure. The supply of commodities are going down or under duress. So put the two together, and we're going to have serious inflation down the road. When's it going to start? I wish I was smart enough to know. I'm not. Warren Buffett the other day said, "Guys, there's no such thing as free lunch in economics," and there's not. It's going to lead to inflation. Mr. Bernanke says he can control it. But please, Mr. Bernanke's been wrong for 300 weeks in a row.
The downside to this is nobody's really prepared for inflation, right? They're not really dealing with it. They're assuming they can sweep it under the carpet and deal with it in 2 or 3 years.
I got my gold.
Well,
I got my silver.
Not everybody goes around in Hong Kong and plunks down greenbacks and then carries away American Eagles and maple leaves like you.
Well, I am suggesting to you that people should be prepared for inflation because it is coming back, unless something is so different this time. But, it is never different this time. It's always going to lead to inflation down the road, and you've got to be prepared for it. Whether you buy agricultural products or zinc, whatever you buy, you need to be prepared.
Let me pull up oil here, then, if we could. Alan in New York. Are you there, Alan? Let's hear from Alan. Can you pull up Alan's little query? Not little, Alan's query. What are the prospects for oil and natural gas prices 1 and 3 years out? Jim, any thoughts on this? Will we get back to 150?
Well, Alan, of course we're going to get back to 150. When we get back there, I don't know. It may be 2013, 2015 for all I know. But Bernie, the IEA, the International Energy Agency, came out recently and pointed out that oil reserves worldwide after new discoveries are declining at over 6% a year. Do the arithmetic. In 15 years, there's no oil. Say they're wrong. Say it's 20, 25 years. The point is the reserves of oil are going down all over the world. The world's natural gas reserves are going down. And the price of oil has to go much, much higher.
The drawdown is abating, though, right? As cars get smaller, people wean themselves after gorging on those gas-sucking SUVs. I mean, the actual drawdown, the per capita draw is abating somewhat. That could temper slow it down, no?
They said that the reserves are declining at over 6%. Say it's 4% a year.
Yeah.
Yes, of course, we're having economic hard time. But the reserves are not going up is the basic point. Reserves of oil are going down all over the world, and nobody's discovered a major new oil field, a giant elephant, in over 40 years. It's a simple thing. I mean, this is not ideological. This is just what's going on. The oil reserves are declining.
Okay.
And whether it goes to 150 in the next 3 years or 5 years, I don't know, but I know it is.
Interesting question here. Andrew just popped in here. This was from 2007. When the report said you actually bought into Alibaba.com. Remember that, the B2B site when it first hit the market? You're talking about a new barter system, a new world order, which is ruled by trade in real goods, real defined things, and not synthetic kind of contrived instruments. Aside from, I mean, one can only, plug so much corn, I presume, and grain and oil into a portfolio. What about the facilitators, those who could facilitate our way into the new trading?
Well, there are companies like Noble, Alibaba, Olam that are in this business. I happen to own shares in all three of those. Will they be the best way? I don't know. I said before that normally commodities themselves are better than the commodity stocks, but I own the some of those stocks you're talking about. Ask me in 5 years.
What are we going to do with currencies here? Your preferred currency is in your pocket, I presume.
No.
Nobody, by the way, I'm not going to give our address away because I don't want people mugging you. We need to send you out with a security detail after. You don't do that, okay? What do we do about currencies, though? What's going to die? What's going to live? I'm just going to kind of rattle these off. What do you think of the Aussie, the CAD, the Loon? The oil currencies, the commodity currencies. I've got one here.